Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Joining us now is Dan Ives, Managing Director, Senior Equity Analyst at Wedbush Securities. Dan, so apparently AI is now out of favor, especially in that big spending, for instance, by the hyperscalers. It's gone from a distinct positive to now a negative. Is that right?
Yeah. I mean, if you look at numbers from Alphabet, and I think what we're going to see from Microsoft, Amazon, and others, the CapEx spending is off the charts. And that's bullish for AI revolution and tech. In terms of the sell-off today, we view it as a blip. In other words, as bad as it feels today, this is not stopping the big tech rally. This continues to be our theme that we've seen the last year and a half.
You mentioned Alphabet. I mean, was during the call with Analyst that Sundar Pichai, the CEO, was telling investors, hey, you're going to have to be patient to see concrete results from the investments the company has been making in artificial intelligence. What's the timeline there? What is he really getting at? How long before investors really see the bang for the buck?
Look, I think when you have names like NVIDIA and Microsoft, you see it more immediately because of where they play, of course, in chips as well as in the cloud. For Alphabet, and obviously on the Google unit, we're talking 6, 9, 12 months to where it's really going to pay off. But when you look at this story, like Google is essentially right now a transformation story. I mean, they have AI Mojo, and I think that could add $34 per share to the story. So my whole, sort of walking investors through it today, you don't sell on news like this. You kind of use it as opportunities for the winners in this AI revolution. And I think Google is front and center as one.
It's been a good policy over the last 8 months to buy NVIDIA after it drops about 10%. It's done that a number of times during that period. Now it's down, by my accounting, 19%. If you take it from an intraday high of 140 down to today, it closed at 114. And also, NVIDIA is not like the hyperscalers. It's making money on its business right now.
Well, I mean, the godfather of AI is Jensen and NVIDIA because they're really the only game in town. We think demand is essentially almost sold out through 2025. So that's one where, we're going to see these sell-offs, and they feel nasty. But the reality is that we think tech stocks are up another 15, 20% as we go into the rest of the year. So our whole playbook has been, you own the winners in these sell-offs. And that's why the bears, they come out of hibernation mode in days like today, even though they've missed the tech rally that essentially has doubled, over the last year.
Can we really highlight the level of concentration risk, though, that there is in this market? There are so few names that we're describing here that are a part of this theme. And I think that history would say that could at some point present a real problem. We're talking about a 3.5% pullback in the Nasdaq today. Okay, big deal. But longer term, if there is this slightest hint of disappointment beyond what we heard yesterday from Alphabet, could there be further erosion here?
Look, I mean, to me, when you look at what's happening in tech, I actually think it's about the second, third, fourth derivative. You look at IBM, you look at Dell, you look at Oracle, look what happens on semis. You talk about SK Hynix and others. This AI revolution, we believe it's 9 p.m. in the AI party. That goes to 4 a.m. I'm not going to say we're going to have ebbs and flows and scares, but the reality is that all that CapEx spending, that's bullish for tech.
Dan, we had a guest on the program not too long ago who said the absolute number one company here to play AI with is Apple. That Apple has shown over the course of its history that it's the smartest company out there in how to make things friendly to consumers. It turned the smartphone from something that Nokia and Ericsson did into, something that everybody had to have. Do you see it that way? And are there other companies like Apple that can do that, like perhaps Samsung?
Yeah, look, I think I agree 100% that Apple is the core AI, especially when you look at Apple Intelligence and what's happened with the iPhone 16. We think that's how you get to a $4 trillion valuation in Apple with an unparalleled install base. The reality is that consumers, when they go through AI, they're going to go through the Cupertino and essentially an Apple device. That's how 25% of the world's going to access AI. You talk about other names that benefit here. I think there's names like an Oracle, ServiceNow. I look at names like Palantir. That's really a pure play name in terms of use cases. So there's a lot of, you talk about narrow. It is narrow now. But over the next 1-2 years, it's going to be a lot broader.
So it's 9 p.m. The party's going till 4 in the morning. Do we need to talk about regulatory risk? Is there at some point a move on the part of government officials to get involved in how artificial intelligence is regulated? Is that a concern that you have?
I mean, that's at 4:35 a.m. when you're at the diner after when you're at the diner after the party. So the point is, regulatory will be there, but for now it's not. I mean, it's self-regulation. You spend a lot of time in the Beltway. Regulatory is going 30 miles an hour in a minivan the right lane. The technology is in a Bugatti going 100 miles an hour in the left lane. So I don't think regulatory is going to be an issue. And I think regardless which presidential candidate wins, I also think we're going to see less regulatory, and which ultimately I think is bullish for big tech.
Well, let's get a broader question answered here from you, Dan. Do we need to worry about a slowdown in the economy as kind of spoiling the party, or no?
I mean, I think right now, unless you have a telescope or binocular, you don't see a recession, right? So I think we're in this Goldilocks soft landing. I'm not saying it's rose and champagne. There's clearly choppiness, but if you look at overall tech earnings, it's bullish. Look at overall bank, broader. 85% are hitting or being earnings. So I think that will be in the background, but it's not going to stop this AI freight train. And especially what I view as kind of a Goldilocks backdrop. And the Fed, they're going to be cutting. They're not hiking.
So I was laughing at the time, but I just want to know, was it a Lamborghini in the fast lane or a Ferrari? What was it?
I'd say a Bugatti in the left.
Bugatti. Okay, good.
Going 100 miles.
I can picture you in that with your flashy colors, too. You wearing flashy colors right at the moment?
I am wearing flashy colors at the moment.
Even in a
which
Zoom
is
call.
making me think about that Bugatti.
Awesome. All right, Dan, thank you. Dan Ives, Managing Director, Senior Equity Analyst at Wedbush Securities. Let's get to Vonnie Quinn, Bloomberg Television on-air correspondent. We wanted to talk a little bit more about Joe Biden's address. Well, as Ed reported there, Vonnie, the speech was really dominated by comments about his legacy. He did talk about passing the torch to a new generation, getting some new voices in, that he would perform his duties to the best of his abilities, and he would support Kamala Harris. What sort of reaction are we hearing from the marketplace?
Well, it was a speech that was heavy on the defense of democracy as well, Brian, and I think that will become a theme throughout the rest of the election fight. You heard Kamala Harris talking about it there in excerpts from her rally speech. As for reaction, I think it was a little bit anticipated, that we would hear from Biden, that he would focus a little bit on his legacy, but I think it was a little bit of a surprise that there was no mention of his stepping out being due to health concerns, but rather as ready to pass the baton to unite America. And when you think about it, that was actually quite clever on the part of the Democrats, right? Because it took the focus off this complaint that's been levied at Harris that she allowed Biden to stay on as president when perhaps he was ailing or wasn't quite as up to it as he had been. done in previous years. It takes that out of the equation. He didn't say he was stepping out due to health concerns. It also takes away some of the other complaints levied at Harris, and it puts back into the agenda the fact that he's passing the baton to a younger generation. He said, I've decided the best way forward is to pass the torch, the best way to unite our nation. So he gave some talking points, and he gave some reasons for perhaps the Trump campaign to get a little more vociferous on some of their complaints.
It's interesting because we know the president is still recovering from a COVID infection, but when you look at the performance, or you kind of heard it tonight, it kind of underscores the decision to step away from the campaign. It seemed very low energy. Is that a fair statement, do you think, Vonnie?
Well, I don't want to opine on the president's health because, after all, he is only just out of COVID quarantine, and it is still a question mark as to what exactly is going on health-wise with the president. But he did really underscore that he intends to serve out the rest of his term, which is another 6 months, and he put a lot on the agenda. He said that he wanted to stop Putin from taking over Ukraine, keep NATO strong. He talked about China. He talked about ending the war in Gaza, bringing all the hostages home. Now, we all know there's, not that much that can be done in 6 months in general, let alone in a lame duck session, which also has an election involved. But there was a lot of ambition still there. And he did mention his achievements, the American Rescue Plan. He passed a clean energy law. Also, he funded some infrastructure and semiconductor manufacturing, and he made sure to point all of those achievements out, Doug.
Does it feel like maybe he steps back a little bit here during this next 6 month period, and maybe Kamala Harris takes a little bit more of the sort of frontline positioning?
I didn't get that impression, Brian. He didn't say that. In fact, he said the opposite. He also said that he was going to be on the campaign trail with her. And, we heard from him when she spoke to her campaign staffers that he was going to be, quote, fully engaged. We also know that he has a full agenda again tomorrow. He's back in the White House today, and he had his speech to the nation tonight. And then on Thursday, he's going to be meeting with Israeli Prime Minister Benjamin Netanyahu. That's going to be a very important meeting. Even though he may not be president in 2025, that's for sure. Netanyahu will want to pass on some messages to Kamala Harris, who has been a little bit stronger on the rhetoric when it comes to Israel and its conduct in Gaza in its war on Hamas. So there is a full agenda, and he does intend to go out there and keep fundraising as well for Harris.
Yeah, and the president did say that he intends to keep working to end the war in Gaza. That meeting that you kind of allude to, do we know what time that's going to happen tomorrow? Biden's meeting with Benjamin Netanyahu?
I believe it was originally scheduled for about 1:30 p.m. Washington time, so we'll see if that stays on the agenda at that time. We know that as well Harris is going to meet with Netanyahu separately, and he's going to meet with Donald Trump Friday. I mean, it's a precarious situation for Netanyahu in some ways, right? Because if there is a change of leader, he's going to want to make sure that the next leader is on his side. And we also know that both Kamala Harris and Donald Trump have, bones to pick with Netanyahu. Trump very, very hurt by Netanyahu's decision to congratulate Biden when he won the 2020 election. And, he has never let Netanyahu forget that. It was under Trump that the embassy moved to Jerusalem, for example, which is something Netanyahu had looked for a long time. And Trump is going to want something from Netanyahu in order to secure the allyship again.
I'm just curious whether you were surprised, and maybe the Republicans themselves were surprised. The president didn't really talk too much about Donald Trump and the Republicans, other than, again, highlighting the comment that, he's making this move because he wants to preserve democracy.
I think it was tacitly there, Brian, if something can be tacitly there in a speech. He did, underscore America's choice in this election. And I'll give you one quote, and I'm not suggesting that Donald Trump should be in your head when, we listen to this, but he did say the great thing about America is here. Kings and dictators do not rule. Yeah. The people do. The power is in your hands. So I think in the background, he was telling people, look, you now have a chance to reset America. He talked about America being an idea, the most powerful idea in the history of the world. And I think he was begging people to perhaps make a choice based on real analysis in this election.
Yeah. Excellent, Vonnie. You're on fire this morning. Thanks so much for joining us. We got to get you back on this program more often. Vonnie Quinn, Bloomberg TV, U.S. on-air correspondent.
I want to bring in Luke Stone now, portfolio manager at Winthrop Capital Management. Luke, let's talk about the price action today. Kind of a meltdown in some of these artificial intelligence names. Was this long overdue?
Yeah, I think, first off, thank you very much for having me. I think really the word of the day today was rotation. I think you heard that pretty much throughout every financial media outlet across the board. Obviously, a lot of market activity focused around the mega cap tech names, focused around the Magnificent Seven, and kind of put more of a focus on the remaining 493 of the S&P 500 there. So when you look at specifically the AI manufacturing sleeve of the S&P 500, I mean, they took a huge hit. And I think it's really the market's way of saying, hey, it's great that you have these earnings projections, but you actually have to hit them. So again, the name of the day was rotation. I think we saw people start to take profits and saw prices just fall precipitously.
One of the questions I put to guests yesterday was, are we entering into a period here where spending on AI might go from a positive to a negative unless you can really show a good return on investment? And it feels to me like the market really rammed home that point today.
Yeah, I think that's completely valid, and I think there's parallels when you look at some of very capex heavy business lines in the past. The first thing that comes to mind is Meta with their soiree into the metaverse about a year and a half ago, posting huge capital expenditure numbers, and the market really reacted negatively. So yes, I do think that huge capex into AI could pose a negative threat with some of these big names.
It's kind of interesting because then you get the news from IBM after the bell, and the company reported a big jump in bookings for its artificial intelligence business. Do we have to treat this more case by case than kind of broad theme of, let's say, artificial intelligence when we're trying to track the trajectory of where this technology may take us?
I think that's a valid point. You look at the largest names in AI, specifically in the chip space. You think your NVIDIAs, your TSMCs, so on and so forth. I mean, they had the real precipitous gains through the start of the year, while some of the domestic manufacturers, some what I would call legacy manufacturers, like your IBMs, really lagged a little bit. So I think you're seeing some catch up that's taking place with the names like IBM, and starting to not close the gap, but gain some of the benefits of their chip manufacturing.
So better breadth in the market would be a great thing, I think. But we had a lot of factors really contributing today. It was not only that, it was not only what we talked about with the overcrowded, overbought AI mega cap tech sector, but also seasonality, valuations, a big part of it. And what I want to ask you about now is the beginnings of a growth scare creeping in. You had those Dudley comments. We had some other key economists saying the Fed has got to get moving here soon. This has changed pretty quickly, but do you buy the growth scare? Personally, I don't that much.
Yeah, it's really hard to cast a straight and narrow thought process behind it. I think we do start to see a macroeconomic environment that is starting to show some cracks. I think you specifically see it within the labor market. You're seeing unemployment start to tick upward, and job growth is occurring in some of the lower skill and part-time jobs that's leading to some potential issues. I don't necessarily think that we're going to fall off of a cliff per se, and I think that's some of the concerns when you see market participants begging for a rate cut. I think market expectations right now peg the first rate cut to take place in September. So I don't necessarily see us falling off of a cliff, but I think we're starting to see an economic market that's showing cracks.
And one of the reasons perhaps that we saw that big drop in yield at the shorter end of the curve, I think the 2-year was down 6 basis points in New York. We're down another 1+ basis point in the Tokyo session here. Is it still your expectations that the Fed does 2 25 basis point rate cuts and nothing more this year?
So we've seen that the market's really pegging Fed activity kind of at at 2 cuts by the end of the year, and then a coin flip in the December meeting. I think if we had to make a bet, it would be on the under side there. I just don't see unemployment ticking drastically upward for us to justify 75 basis points. So I think yes, I think a 50 basis point rise is kind of a fair, or I'm sorry,
cut,
50 basis point cut rather. I think that's probably more of a fair assessment of the market.
If we do see some cracks in growth, do you think that will manifest pretty heavily in some areas of real estate and even commercial real estate?
Yeah, and I think we've started to see some of the cracks take place within commercial real estate. Yesterday we had the Blackstone Mortgage Trust, their huge public REIT that's a global public REIT, had some significant charge-off issues, taking specific reserves on specific properties, and announced a dividend cut, which the dividend cut was nearly a cut of 33%, which led to the REIT itself falling 10%. So I do see some potential cracks that can take place within the commercial real estate market. Now, that said, there are pockets where there are value. I think every time I've come on here, we've talked data centers. They continue to post strength, but as we start to see AI maybe taking a slower track, who knows what can happen there.
We just heard from President Biden at the top of the hour. Obviously, the elephant in the room is the election. Today, former Treasury Secretary Larry Summers was saying Republicans are setting the U.S. up for what he termed a Liz Truss moment. That basically being that policies that the GOP is supporting would widen fiscal deficits and then weaken the dollar at the same time. I'm curious about what you're hearing from clients in regard to the election and where some of the divergences in terms of economic policy, tax cuts, potential tariffs. I mean, is this of concern to your clients?
Yeah, I think that, I think that there's a portion of the client base that still essentially idolizes the Republican viewpoint of lower tax rates and that will bring predominant growth. But there is starting to be a creeping voice within the client base that is a little concerned with what can happen come the election in November. Now, I think that what we've seen take place in the macro scene right now is limited. There's less to do with who has the keys to the car right now, and more of just a natural progression through COVID policy and the associated inflationary pressures that came from it. So is there concern come November? Sure. But I think that this is more of just the market working its way through.
So our show is all about Asia. Let me see if I can skillfully find a segue from the politics of the election into Asia. Goldman Sachs said yesterday something kind of interesting, that China is saving its firepower for the economy, waiting for the possibility of President Trump winning, that it will need that extra muscle. I don't know if you've been thinking much about China and what's happening there, but what do you make of those comments?
Yeah, I think that there's been that narrative that's come through about China. I know China's had a concerted effort to start to take a lot of American-centric industries and really move them into mainland China, and almost make American imports a thing of the past. So while I can understand why we would expect China to muscle up a little bit, given the past trade war and some issues there. I think that's probably a bit far. I think any leader's going to try to bolster his economy as strong as he can at any time, not just if an opponent from another nation wins an election.
Sorry, Luke, tough sledding today. I don't know whether you're expecting more in the near term. I'm curious about how much dry powder you're sitting on right now, your cash position right now, and whether the House call it Winthrop Capital is that maybe we get a little bit more selling and that there will be opportunities to maybe pick up some of the names that you like, but now is not the time. Is that a fair statement?
Yeah, I think that's completely fair. We continue to sit on probably anywhere from 3 to 8% of cash in some of our core strategies, and that's exactly the point. Is just for us to keep a little bit of dry powder, and just for us to deploy once we see a significant pullback. So 3% on Nasdaq, it's a pretty big pullback, but I think we would wait till we see a larger pullback.
Yeah, and it's kind of interesting it's happening all at once. Maybe that's better than if it was this long, gradual slide to the downside. We've got NVIDIA on August 28th. Do they knock it out of the park? Give you 20 seconds.
I think they'll probably fall in line. I think that there's just so many headwinds right now from a growth trajectory standpoint. It's going to be hard for them to hit the goals that they've currently set.
All right, Luke, thanks very much for joining us. Appreciate it. Luke Stone, portfolio manager at Winthrop Capital Management.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.